Hey class, I wanted to give you some supplemental material in regard to Chapter 3 for adjusting entries. Adjusting entries for prepaid expenses, you'll see over here what we're going to do is we're basically going to reduce an asset and we're going to create an expense. Remember, one's a balance sheet item, one's an income statement item. So all adjusting entries will always affect balance sheet items and income statement items, always. So increases debit to an expense account and decreases credits in asset account. This is what we do in regard to prepaid expenses. So let's go through an illustration. Pioneer Advertising Agency purchased advertising supplies costing $2,500 on October 5th. Pioneer recorded the payment by increasing debiting the asset advertising supplies. Uh, this account shows a balance of $2,500 October 31st, which is what, 26 days later. In that trial balance. So an inventory was taken at the close of business on October 31st and revealed that 1,000 supplies were in hand. So they had 2,500. Now we're counting them and saying, hey, we have 1,000 left. So $1,500 was used. So that journal entry is going to look like this: advertising expense or advertising supplies expense, $1,500. Keyword expense, where I was going to debit these. And advertising supplies, the actual asset, we're going to reduce. And when we reduce an asset, we credit it. Here we go, another one. October 4th, Pioneer Advertising Agency paid $600 for a fire insurance policy. Coverage began on October 1st. They recorded the payment by increasing debiting prepaid insurance. The asset shows a balance of $600 in the October 31st trial balance. So basically, insurance of $50, 600 divided by 12 expires each month. And the way we show that is insurance expense $50, prepaid expense $50. Depreciation. Buildings, equipment, and vehicles, long-lived assets, are recorded as assets rather than expense in the year acquired. Companies report a portion of the cost of a long-lived asset as an expense, depreciation, during each period of the asset's useful life. So basically, that's all part of the matching principle. An example, Pioneer Advertising estimates depreciation on the office equipment to be $480 a year or $400 a month. So that expense, or I'm sorry, that journal entry will be depreciation expense, debit, accumulated depreciation credit. We will never touch the actual equipment. That always stays the same. So what we're doing is we're reducing the book value, not market value. We're reducing the book value by doing this. So for unearned revenues, let's try an example. Pioneer Advertising received $1,200 on October 2nd for advertising services expected to be completed by December 31st. Unearned service revenue shows a balance of $1,200 in October 31st trial balance. Analysis reveals that the company earned $400 on these fees in October. So we're basically taking a liability and we're reducing that and going to make that into revenue. So unearned service revenue for $400, we're debiting that liability to get rid of it, or I'm sorry, to reduce it, and we're getting credit for the actual revenue. See if we have more examples. Accrued revenues, basically where we increase an asset and we increase revenue. In October, Pioneer earned $200 for advertising services that have not been recorded. This journal entry will debit accounts receivable, will credit service revenue. Remember, that's basically they sold something, quote, on account. They did not receive any cash. So debit accounts receivable uh, for that asset. We're going to credit revenues. Adjusting entry serves two purposes: records the obligations and records the expenses, or recognizes the expenses. Here's an example with interest income. I'm sorry, interest expense, where we're going to debit interest expense and credit interest payable. And right now, this transaction right here, we're not paying anything. We're just assuming assuming that we're going to have a liability, or we do have a liability. We're going to recognize a liability. When we pay this, we're going to debit interest payable, and we're actually going to credit cash. So hopefully that was helpful. Any questions, just feel free to post in the classroom.